Mark Smith from Red Wave Investments, redwaveinvestments.com. Let him manage your Wall Street fantasy team. Mark, thank you for taking a little time out each day to kind of go through this. And again, it doesn't look like Wall Street's buying into this Cyprus deal, the quote Orwellian haircut, which is just, hey, you know what? Guess what? You were dumb enough to put your money here. We're taking 40% of it because you're the greedy rich guys. Take us through. I mean, Wall Street down a little bit today again, despite the idea that the Eurozone isn't going to collapse under it. But I think they're just a little dubious about it. How are you doing today?
I'm doing very well, thank you. And I think you're right. I think that this Cyprus deal, while not, I don't even know if I would say it's not as bad as the initially proposed plan. I mean, it's differently proposed, and certain people are going to take a much bigger haircut than they previously were, and other people are being allowed to not take any haircut to their deposits. But, you know, what I think was really interesting today, and this especially hit stocks in the morning, but, you know, you had one of the European officials say that this could be a template for bank rescues around the Eurozone, which, I mean, that should startle, you know, any European, and you saw that today in stocks. And while the Dow was only down 0.5% or so and ended up closing off of its lows, if you look at the European banks, whether, you know, Deutsche Bank, Barclays, et cetera, they were all down 2, 3, 4%. And I think similar to the things that we talked about last week, this precedent setting and this fear of bank runs is spooking investors a little bit. And you know, the banks in Cyprus have been closed since March 16th, which was 2 Fridays ago now, and they were originally supposed to open last Thursday, and then they pushed to tomorrow, and now they're saying they're going to be closed indefinitely. They're not really sure when they're going to open, and you know, I think, you know, maybe we successfully kicked the can with this latest bailout package. But we definitely kind of reawaken people's concerns and awareness to all the problems that Europe is facing.
Well, and here's the interesting part of this, Mark, is that they're basing this on the fact that, oh, well, Cyprus is a tax haven where people are hiding from paying their due. I mean, we're talking about, you know, people from countries where taxes are 40, 45%. We're talking about some people who already are paying some pretty high taxes. So where they put the rest of their money, now they're coming after 40% of that on top of it. It's a scary scenario, at least through the rest of the European Union, for Italy and Spain and Greece and a lot of these other countries, if this is going to be the way the European Union starts confiscating.
Well, and I agree with you, and I think that is what is kind of scary. And there's been this view that there is kind of core European countries, and, you know, Germany, France, Italy, Spain, and maybe even Greece, and the thought was, well, what happens in these peripheral countries, you know, Cyprus isn't really going to impact kind of the core Europe. But, you know, right now, as everybody who's listening knows, interest rates are basically zero. You're not making any money having your money in a bank. So if I was sitting in Spain or Italy, I mean, I would probably start thinking seriously about what alternatives I have, because I do think this could be one of those things that, you know, eventually regular people get hit by this, because I mean, there's just, I mean, we're in sort of uncharted territories where we're reaching a point where all these European countries, they just don't have any more money. I mean, there's just not more money to spend and to save each other and to bail each other out. And you know, I don't know whether it's a good or a bad thing to keep kicking this can down the road, but at some point we're going to have to address the problem that there's just not money to fund this entire system that exists over there.
Well, and the other side of it is, as I'm concerned, and I would like to hear what you think about it, is this idea, Mark, that when we start looking into the manufacturing that's done in these countries, it's invested in, you know, it's just like it is here. There are companies who get investment capital from these investors in these banks, and it's going to cripple their manufacturing side of it as well. So that's actually going to lessen you know, pressure on some of those countries to even make better decisions, because you're going to see, you know, more unemployment build up.
Well, and I think we're already seeing that, and in many respects, I think the whole Eurozone experiment has been very unique to see how it's developed. And if you look at it, essentially Germany, you know, you could almost argue that this is just one big system that just funnels money from peripheral and southern countries into Germany, right? I mean, they don't compete on a currency basis. They all share the same currency, and yet Germany works longer work weeks. They're more efficient in all of their manufacturing, and yet their currency never appreciates relative to most of their trading partners. So they just, in effect, sit there and outwork and out-efficiency other countries in the Eurozone, and they make other countries' manufacturing even less competitive than it otherwise would be. And I agree with you. This is just exacerbating that, and which is why it's interesting why some of these countries haven't just decided, let's just get out of the euro, get our own currency, let it devalue, and then start being able to export and manufacture things again.
Well, let me ask you, because I remember when the wall fell, people said the wall falling was all well and good from a humanitarian and a heartwarming, and the end of the Cold War was great. But economically, it devastated the West German economy because you had all of East Germany come flooding in. It's like having half your family move in with you and start eating out of your refrigerator. It was how it was described on the television when it happened to me, anyway. And yet Germany rebounded from that far faster than any of the pundits claimed they would. What do they do that's so much better than the rest of the economy? I know what makes America's economy exceptional, and it's that we can self-associate with our employers still to this point, and I think that gives us a certain edge. But what makes the German economy so good?
Well, I think there's a few different things, and I think that we are, a freer market and have allowed, just straight free market capitalism to succeed much better than anyone else in the world has. But I think Germany has done a better job than other people in Europe have done, and I think that they've taken a more, maybe a more deliberate approach to how they produce, how they work, how they succeed. And you look at these countries, and just looking at something as basic as retirement age, and in Germany it's 65, and in Greece and the southern countries it's often 55. And so, you just see this mindset, and I don't know if it's a cultural thing. I don't know if it's a political thing that they've been able to focus on outworking and being more efficient in their work than other countries have. And they've almost, which is why I think it's interesting to see how they always talk about not wanting to keep bailing these countries out, and yet they keep lining up to do it, because I think that they know ultimately the euro has been a huge boon to the German economy because they don't have to compete on currency anymore, right? Their currency doesn't appreciate relative to everyone else and outprice their manufacturing and their export sector. So they have a level playing field, and they know that they'll work harder and produce more than the other European countries.
What is the worst case scenario outcome of this, Mark, in your mind, for somebody who's just trying to watch over their retirement plan and their 401k with you at Red Wave Investments?
Right. Well, I think what is important as people think about their portfolios and their investments and what's going on in the world is there's almost two things to pay attention to. I mean, there's definitely these macroeconomic trends that are going to significantly impact certain countries and certain parties within these countries. And then I think it's important to remember what you're buying. When you buy an individual stock, you're buying an ownership interest in a certain company. And so that company, and maybe it's Coca-Cola, right? So that company is going to very likely continue to sell Coca-Cola all over the world, right? And whether Cyprus banking sector collapses or doesn't, the people are probably going to keep drinking Coca-Cola. Maybe they drink marginally less, maybe they drink marginally more. But so I think it's important to remember that if you're buying high-quality businesses that have products that people, they're not necessarily tied to the whims of how their individual country is doing or how, macroeconomic factors are, but that there's going to be a certain level of demand for, you have a pretty good reassurance that, yes, there might be fluctuations in the price of that stock, but it's going to continue to be a going concern and a going business. And I think that makes it important to think about buying individual stocks versus, say, just throwing your money in a mutual fund, because you can say, I know what these companies do, I know what they offer, I know their products are going to be there, and I know there's demand for it. And yes, there's noise and there's problems out there, but these businesses continue to offer compelling valuation from an ownership standpoint.
Well, I appreciate it. And Mark, by the way, just for everyone behind the scenes, I came on, I said, so we were just talking about Air Products. My father-in-law's union was an Air Products union, machinist with them, but they did their own pension instead of leaving it on Air Products and those kind of things. And you said, just off the hand, he said, well, I don't know much except that they're a really good company to invest with. But those are the kind of business models, isn't it, that we need to look at are they crippled with legacy costs or as my father-in-law said, why would I? And this is a guy who founded a union, is supported Democrats his whole life, gone out and volunteered for Democratic parties in Long Island where he worked and everything, but when discussing pensions, he said, why would I leave the pension on the company? Why, the pension's our responsibility. They're not working for the company anymore. Why should they pay them anymore? That's the kind of logical stuff that I think is so lost in some of our labor relations now, and people just want somebody else to always pay for it. But those are the kind of business things that we need to look under the hood of all these companies, isn't it, Mark?
Yeah, I definitely agree. And when you look at some of these older industrial companies, and Air Products has, over a 10-year period, it hasn't necessarily been a great business or 5-year period, but it has, historically been a very good company to own. It pays a good dividend. But all these companies like it, they do have pension issues, and you do have to think about how much pension obligation they're going to have on a going basis, because that is cash that has to come out of the business and go into the pension fund. Yeah. And, I don't exactly know the answer, and I don't know, without getting into like a big social argument about, who should be responsible for people's retirements. I mean, I think individually you should always put it on yourself because you're going to care more about your retirement than anybody else. But, there have been arguments out there that people say pension funds should be separate legal, entirely legally distinct from the companies that they're associated with, and the companies just kind of write checks and pay into it, and then the pension fund deals with it. And I think that's maybe a step in the right direction, but it is 100% necessary to understand the pension obligations of a company before we think about investing in it.
RedWaveInvestments.com is where you can find him, Mark Smith, Mark, M-A-R-C, at RedWaveInvestments.com. Thank you, Mark. You have a great afternoon, my friend.
Thanks, Joe. You too.